Other member Ngô Thành Danh, Võ Thành Lân, Mỹ Hoa, and Trần Quốc Hưng. Today our team will present about an essential topic in business world. This is transfer pricing. Transfer pricing is referred to the transfers of goods, services, and also intellectual properties between related parties. Next slide. As you can see on the slide, that's a multinational corporation with a complicated web of subsidiaries in different countries, so they will ship profits from high tax country to low tax country to pay less. Next. This is the reason why tax authorities should supervise transfer pricing of multinational corporation to ensure that company pay the appropriate amount of tax in each country, and also to ensure fair competition in the market. Next, I would like to invite Mỹ Hoa to continue our presentation.
Thank you. So I will continue our presentations. So the enterprise having related parties transactions have the following obligations. The first one is disclosure. They have to disclose all of the transactions in their financial statement, including the nature, the extent of the transactions, also the amount included, and have to submit it together with the tax income finalizations return. And the second one is the arm's length principle. The transactions must be conducted on an arm's length basis, which means that they should be priced as if all the parties were unrelated and independent. And the third one is the approval. They have to obtain the approval from the board of directors or the committee of independent directors before any transactions they have to conduct it. And the fourth one is monitoring. They have to monitor all the related party transactions on an ongoing basis in order to ensure that they continue to be at arm's length and also in the best interest of the company and its shareholders. So the last one and the most important is the documentations. They have to maintain all the documentations that demonstrate that all the related parties transactions are at arm's length, and also they have to include analysis or appraisal used to determine the pricings, and also include the local file, the master file, and the country-to-country report. And all the transfer pricing documentation package must be prepared before the time they fill in the enterprise tax finalization return. And when the tax authorities carry out a transfer pricing audit, the time limit to submit all the documentation packets is within the 15 working days since the request was sent. So the next question will be presented by Mr. Lung.
And my name is Lun. I will continue the presentation. About the related party definition. The ownership threshold required to be a related party under degree 132 is 25%, and a company and certain individual are also considered related party in certain circumstances. And Vietnam transfer pricing rules also apply to domestic related party transaction. And about transfer pricing declaration form, the degree 132 requires that the transfer pricing method applied must ensure that there is no degree of tax liability to state budget, and degree 132 contains a transfer pricing declaration form which requires disclosure of detailed information, including segmentation of profits and loss by related party and third party transaction, and transfer pricing documentation. the Decree 132 introduced a three-tier transfer pricing documentation approach to collect more tax-related information on multinational company in business operation. The three-tier transfer pricing documentation had to be prepared before the submission day of the annual tax return and the net Hưng.
Hi, my name is Hưng, and here is my answer for question number 4. And there has been a marked increase in the number of transfer pricing audits performed in recent years, and with these adopting in increasingly sophisticated audits and the common challenges by tax authority include questions on the validity of comparable selected in TP documentation. Number 2, deductibility of intra-group services charges. And number 3, then the fluctuation in segmented and whole company profit margin over the year, so that most general tax audit will now include a review of the taxpayer transfer pricing positions. And a company in loss-making positions also draw attention from tax authorities and are expected to be in the position to explain their business circumstances. And as you can as you can see on in the middle of the slide, there are 5 situations that the tax authority has the right to impose the price, the profit rate, and the profit distribution ratio. And finally, there are 3 related obligations. The first one is the penalty on the transfer pricing, included penalty from 20% to 30% the tax areas. The second is a fine of 3 basis points per day of late payment interest on areas. And the last one is the fine for tax evasion from 1 to 3 times the amount of tax arrears depending on the nature. And next is the presentation of thành, dành.
Hi everyone, and now I will represent my group to introduce 2 remaining questions. If I am a chief accountant of a multinational company, I would execute a clear and reasonable transfer pricing policy to limit the risk of being fined by the tax authorities. For example, contract and documentation should be stored completely and accurately to prove that their transactions are based on objective and reasonable rights. And secondly, the accountant should regularly evaluate and audit the transfer pricing policy. By doing these activities, the chief accountant can find out and fix the mistake before the tax agency inspection. And next, the chief accountant should highly concentrate on financial reporting. So the company must comply with the accounting process and the accuracies of accounting data. Also, they should build a relationship with the tax agency and cooperate with the tax official to reduce the risk of being fined. And finally, the company can find out the professional advice from tax experts in some consultant companies. So, and the last question, can the firm prove by itself that the transaction right with related party is arm's length, or if it needs to be consulted by a consultant? So, I think enterprise can choose one of 2 options. Firstly, they can approve itself by some TP methodologies. The chief accountant can do some calculation to calculate the comparables imposed by OECD in the transfer pricing guidelines for multinational corporation. For example, CUP, resale price, cost plus methods, comparable net profit or profit split, So the tightening of acceptable range for this transfer price is from 35 percentile to 75 percentile. And if the company cannot choose to prove itself, they can consult with a third-party consultant, because these companies can help them to determine the exact transfer price, and also they have experience in determining that price. So also they can strengthen the internal control in this company to help them to calculate some comparable, also repair some dossier like local file, master file, or country by country report. So also finally they can help the company settle dispute in conflict resolution with the tax authority or tax official. And this is also the end of our group presentation. And here's some reference of our group. Thank you for your attention.
Thank you for your presentation here. So actually transfer pricings are quite hard and sensitive topic, right? And you are chief accountant, so it's very important for you guys to manage. So how can we follow the transfer pricing regulation and also ensure your profit as good as possible? Related to the laws, so can you guys share with us about how can the laws, the government or the tax authorize manage the transfer pricing now? How can, right? Because in the past, so maybe transfer pricing is the issue, but now we have solution already. So we want you to tell us about this. Okay, thank you.
And now following to Ms. Dang's question, I will also have one question for you. And in case of loan transaction between related party, how can the enterprise prove that transaction is at arm's length? Is a degree 132? Yeah, based on that.
Number one, discuss transfer pricing based on ethical perspective. So we divide it into two sides, positive and negative. And first, we are going to discuss negative perspective. The most significant issues that company can manipulate transfer pricing in order to avoid tax or shift profit to other countries that has lower tax. And these situations is usually called as tax avoidance, and it's a criticized for depriving the country budget revenue. And next, the company participate in unethical behavior that harm their local employee. For example, company can set transfer pricing in a way to allow them to pay lower wages to their employee in the countries that have weaker labor protection, or to avoid environmental regulation that are stricter in some countries than in other countries. And this leads to the exploitation, poor working conditions, and environmental damage. And about the positive perspective, transfer pricing can help to promote economic growth and job creation in the country that companies are located in, and by ensuring that the profit are allocated fairly in the entity within group organization. transfer pricing can create a stable and predictable business environment which attract investment and promote entrepreneurship. And in conclusion, transfer pricing has both sides, advantages and disadvantages, and by contributing to a sustainable economic development and promoting social responsibility and tax regulation, company can illustrate their commitment to ethical principle and create value for social.
So next, I will answer the question about how the company can be compliant with the tax law, but can also increase their profit as well. So I think it's quite challenging for enterprise to carry out this target, but I do believe that there are several ways. One including is trying to implement the effective tax planning strategies. This may include like optimize the allocations of their costs and their expense, and also try to leverage the tax treaties and tax incentives. Besides, they can also structure their transactions in a tax efficient manner so that they can save money from their tax. And besides, they can also utilize the transfer pricing method. Like they have a lot of transfer pricing method to choose, and the story is they need to choose the most appropriate method so that they can maximize their profits and choose the price that benefits them the most. And the third one is try to enhance the efficiency, like by improving the operationals and also productivities productivities, they can reduce their costs and thus try to increase their profits without violating the law. So that's our suggestions for the enterprise. And now we'll move on to the next question.
Hello everyone, and now I will answer two remaining questions about some sharing about the current law from the government to manage the transfer pricing. I think the first guideline that brings to my mind is Decree 132 issues on the 5th November 2020, and also OECD guidelines about the Decree 312. There are many guidelines and also TP documentation for company to declare and also submit with the annual tax returns. And about OECD, this is the hot topic today. As you know, the BRACE BEPS Pillar 2 base erosion and profit shifting, and OECD also provides a minimum global tax rate of 15%. So maybe in the future, OECD guidelines is also apply for many multinational corporations that want to invest in Vietnam. So about the last question, transfer pricing in loan transaction from Ms. Phu. So I think when determining the transfer price for a loan transaction or financial transaction, there are many factors that we would like to consider, such as the interest rate, the repayment term, collateral, and also the credit rating of customer. So all the conditions must be the same or nearly the same with the third party to ensure there is not transfer pricing in this company. So this is also particularly important for tax purpose, because the transfer price can affect the amount of taxable revenue or taxable income for both lender or borrower. Tax authority may challenge the transfer price of the loan transaction if it is not sensible. They held the authority to impose the rise which arm's principle. So also in loan transaction, we are held interest expense. So interest expense also apply with the cap of deductibility of 30%. Under degree 132, the cap on the tax deductibility of interest increased from 20 to 30%. The cap applied to the net interest expense after offsetting the interest income from investment of the company. Also, non-deductible expense can be carried forward to subsequent 5 years if the company do not use all of them. So, I think this is my answer. Thank you. Are there any questions?
My question so simple, but when you explain to me, I don't understand. That means because if you would like to prove your related party transaction, you have to collect the benchmark from the outside. Yeah. That question mean I would like to ask you where we can collect that benchmark in order to compare with loan interest rate. That's all.
Yeah, I also mentioned this in my presentation about the credit term, credit rating, and also the interest. Yeah, at the first.
So for the how to manage the price transfer pricing by the government. So transfer pricing, for example, we talk about Coca-Cola or Nike, Adidas, right?
Yeah.
So how can the government, the Vietnamese government, manage the transfer pricing so to avoid the tax evasion, for example, like this, right?
Yeah.
How can?
In my opinion, the tax authority can organize some seminar or webinar on training about the knowledge on transfer pricing for all multinational corporations in Vietnam, so that they can aware of the importance of this issue, and also they can perform the tax agency inspection regularly into those companies to avoid this issue. For example, 3 to 5 years, maybe shorter.
Okay, so when you talk about the degree 132, so it's related to ownership, right? Not transfer pricing, management. So so we share with you a little bit about how can government manage transfer pricing. So we just care for the input or the output. So if, for example, if the company in Vietnam and they import the material from another country, for example, like this, and the government just care for the how much they import, and then they charge level based on the laws. Is it? Ms. Phượng can share a little bit for you about this one.
Yeah, thank you.
First of all, I will answer about the question that I just talked to you. The benchmark we can collect from the state bank. State bank.
State bank.
The bank that the enterprise open the account and do the main operation there. Concerning about Ms. Trang, transfer pricing managed because the authority, they collect the report from enterprise every year, and they have a big data about the benchmark. They can collect from that. First, as Ms. Trang explained, that means symbol about how they oppose tax for the enterprise. For example, if you have an input, with the related party, they will base on the output.
Yeah, I see.
Because output is independent transaction. So they will based on that, they will impose the tax.
Yeah, I see.
Yeah, and inversely, if the output they will pass on input. That's so simple.
Yes, I see. Thank you. Thank you for your input.
So it means that the government they not interested in the profit the company report.
Yes.
Right? Okay.
Yeah, right.
For the question, okay, thank you very much for your presentation. For the group one, so we talk a little bit about the feedback from us. So for the question one,